All right, guys. I promise you I'll give you the full 5 minutes. So we got a couple more minutes before we start the next session here. Um, what was your biggest takeaway from the last session? Either it could be either from Tommy's or from that last 2026 Big Beautiful Bill Act. What was your main takeaways from that session here? Let's see what the people liked. And I apologize. I know it was really numbers heavy, but I just wanted to make sure to give you as much. I was trying to like extract all the dozens of hours I was studying that thing to and drop it over to you. PTT is a new idea for me. Yeah, I know. The PTT really did blow my mind as well. When I was going through it for the first time, I was like, man, like I've never heard anyone talk about this. How much money I'm leaving to the government, especially in California, kill me. Yeah. Yeah. My friends over in California, and any other high tax states, you guys, I mean, you guys are paying for the tax, right? California, we were there recently and it's beautiful there, but the state taxes, man, I don't think I could do it, but all power to you. All right, guys. So let me share my screen here, make sure that you guys can see this. All right, before we get going, let me know in the chat if you guys can see my screen, if you guys can hear me okay. Good. Cool, cool. And also, are we ready to get started? Did I give you guys enough time? Let me know in the chat if we gave you enough time, if you guys are ready to get going. See some yeses. Okay, cool. All right. So we spent the last few days together, right? We learned how Wall Street, the IRS is designed to us for us to not, they get paid first and we just get whatever's left. We talked about how credit actually works when you understand the rules. We went to a bunch of different tax codes that let high earners keep tens of thousands of dollars more per year. We have talked about investment accounts, how to build that completely tax free, how to protect everything as well. So that way, all the hard work that we build doesn't just disappear overnight. Okay. Now, here's a problem though. 95% of people who go through programs like this never do anything with it. So I want you guys to drop a one in the chat if you've ever learned something valuable, but just never acted on it. Drop one in the chat if you've ever learned something valuable and never acted on it. And I'm not trying to shame you guys. I've done it before. Yeah. I mean, look at that. Everyone's done it, right? Notes in a folder, motivation that fades, life gets busy, right? We have kids, work, spouse, asking what's for dinner. A year goes by and then nothing changes. Knowledge without execution is just expensive entertainment. And that's what I want to cover in this session. So think of wealth building like a pyramid with 5 levels. At the base, you cut taxes legally so you can keep 50 to 70% plus more of what you earn. And next, we eliminate high interest debt so money stops bleeding out every month. Third thing, we can create five to $50,000 plus per month income streams without trading more hours. The fourth, use tax-free investment vehicles that compound over decades. And then the top level, we protect it all with the right structure so it passes across generations. If you start stacking these five correctly, you can add $100,000 or more to your net worth in 12 months. And so today's session is going to be a little different, right? So we're going to be mapping out your next 12 months, quarter by quarter, what to do first, what comes next, and what you save until later. So I'm going to show you guys what you're doing right now, because I know a lot of you guys are probably working full time, raising kids, trying to build wealth with a few hours per week, right? Because if you fail to plan, then you plan to fail. So I want to make this session change that for good. So let me paint a picture of what your life probably looks like right now. So let's say you're working 50, maybe 60 hours per week. You have kids. You need to be at soccer practice by 5:30. You got a spouse who's also juggling work and life, mortgage that's due on the first of every month. And your weekends probably aren't really the weekends. There's grocery shopping, yard work, family obligations. Maybe your parents need help with something, and you barely have time to breathe, let alone build wealth. So let me be clear about what we're not doing here. Okay, you're not having to quit your job. You're not becoming a full-time investor overnight. You're not working 80 plus hour weeks. You're definitely not going to be abandoning your family to build an empire. Okay, that's not what this is. This is a couple hours per week building something alongside your W 2. We're planning around your life, not replacing it. And you're keeping your corporate salary, the benefits, the match, the stability while you start stacking other income streams on the side. Because most people who've done this successfully are working 50 plus hour weeks. They had kids, mortgages, aging parents, all the same stuff that we have, right? And so the difference wasn't time, it was knowing what to do and when to do it. And they didn't have more hours in the day, they just knew the sequence. So let me ask you guys something. Okay, how many hours per week can you honestly commit to this? Okay, not I should be able to, or maybe if everything goes perfectly, your actual life, your actual schedule. And here's some of your options. Okay, so 1 to 2 hours per week, 2 to 4 hours per week, or 4+ hours per week. Let me know in the chat right here. All right, let me see what we got. Okay, 2 to 4, 1 to 2. All right. So a lot of you guys, looks like a lot of you guys said 2 to 4 hour range. Some said 1 to 2. A few said 4+. Okay. Now here's what matters. Whatever you just picked is enough. Okay. You don't need to match what someone else is doing. You just need a plan that works for your schedule, because someone doing an hour per week for 12 months will be in a completely different financial position than someone doing 0 hours per week for 12 months. Okay. That's a gap I want to close in this session. Now, before we get into the roadmap, let's deal with the three things that are probably running through your head right now. First is I don't have time. Okay, let's say you work 50+ hours a week, and by Thursday you're exhausted, and I totally get that. But let's just break it down by the math. So let's say you have 8 hours in a week. This requires 2 hours. Okay, that's 1.2% of your week. Like most of us spend more time scrolling on Instagram or in meetings that could have been emails. Here's another way to look at it. Filing an S corp election takes about 2 hours. So for someone earning $150,000 with side business income, it can save you $500 to $1,500 per month in self-employment taxes. That's $500 per hour. So we don't have a time problem. We have a priority problem. And you don't have to do this everything at once, right? So you can start with one thing. You can open an HSA. That takes 30 minutes. That's going to save you $1,200 per year. And that's just week one. You don't need to transform your entire financial life on Saturday morning. All you have to do is just do one thing that moves the needle, and then you keep moving forward. Other people say, okay, what if I screw this up? The thing is, you're going to. Everyone does. You file something wrong, you miss a deduction, you forget to track mileage, you deploy 10 grand into an investment that doesn't work out the right way you thought. That's just part of the process, right? But here's the thing. Mistakes on 10 grand when you're 35 are lessons. But mistakes on your entire retirement fund when you're 65, those are more like disasters. So would you rather learn how to structure your finances now, or when you have 30 and while you have 30 years to recover, or figure it out at retirement age when there's no time left? Because the people who wait until everything is perfect never start. You're not trying to be perfect here. Okay. We're just trying to be better than you were 12 months ago. So, yes, you're going to mess up, but that's good. That means you're actually doing it. Okay. So, let's map out our next 12 months. 4 quarters, each one has specific focuses. You're not doing everything at once, you're following a sequence. So, the first quarter, we're going to stop the bleeding. Q2, build a foundation plus the first income that starts coming in. Q3, we're going to scale and compound. And then Q4, we're going to protect and maximize. So quarter one is going to take a couple hours per week. Okay. And our goal here is to save $500 to $2,000 per month immediately. This is where most people mess up. They try to do everything at once. They try to launch a business. They start investing, restructure taxes. Just stop. Okay. Quarter one is literally just about plugging the leaks. We want to stop the bleeding first, and then we start to build. So the first thing is to get a CPA who knows advanced strategies. Okay. The first thing that you're doing is finding someone who actually understands this stuff. Okay. Not your neighbor's tax guy who does basic W-2s. You need someone who knows S corps, solo 401ks, short-term rental strategies, QBI deductions. And if your CPA doesn't know, then this is what this challenge is about, to gear you with the knowledge that you need to know to bring to tax season. And just make sure that they actually know the advanced stuff and not just basic tax prep though. Okay. The second thing is to file your LLC or S corp. Okay. And again, don't DIY this. Don't watch YouTube videos and hope you get it right. Your CPA or entity specialist is going to handle this. Okay. So the filing paperwork with your state, getting your EIN from the IRS, opening a business checking account, setting up the structure correctly. Then third thing is to clean up your personal credit. You can literally go to pull your credit report at annualcreditreport.com. That's the only free official site that I'm aware of. And then start looking through the 3 reports for errors. Look for old collections, accounts you didn't open, any negative marks past the statute of limitations, dispute anything that's wrong online through each bureau's website. Okay. And then pay down the high interest credit cards. Get your utilization under 30%. And our target here is trying to get a 700+ score by the end of month 2. This is going to matter because you can't stack business credit if your personal credit is down, if it's below those thresholds. Okay. So the banks look at your personal credit score first. Now, the fourth thing is to open up an HSA and calculate your home office. HSA takes 30 minutes through your employer portal if you have a high deductible health plan. 2026 max is $4,400 if you're single, $8,550 if you're married. This is going to save you $1,200 to $2,400 per year in taxes and has a triple tax advantage. It's deductible going in, gross tax free, and then comes out tax free for medical expenses. Okay, now home office deduction. So you measure your home office space, calculate what percentage of your home it is, and then you want to take photos. It takes an hour. This can easily save you $3,000 to $6,000 per year. So that way you save yourself $500 to $1,500 per month. That's month one. Fifth is to apply for business credit cards. So once your personal credit hits 700 plus, you're ready to start the business credit on. So you can start applying for Chase Inc. Business Preferred. There's Amex Business Platinum as a backup option. And you want to start applying to these strategically when your credit score is at its peak. Each application result is going to hit a hard inquiry, typically between 5 to 10 points, but it's going to usually recover within a few months. So our target here is between $50,000 to $80,000 in total credit at 0% APR for 12 to 15 months. And this is what you can use to fund your short-term rental in quarter two. And you're not going to have to go into debt for this. Okay, you're accessing 0% capital to deploy into an income-generating asset if that's the route that you want to go. Now, the sixth thing is to set up tracking and tax payments. So you can download Expensify. I use QuickBooks online, and then link your business credit cards. So you can set up expense categories. From this point forward, you want to start tracking every business expense, every receipt, every purchase, and work with your CPA to set it up quarterly, quarterly estimated tax payments as well. You can also set up an automatic transfer. So 15% of every dollar of a business income can go into a separate tax savings account. And when quarterly payments are due, the money's already there. So by the end of quarter one, 3 months in, here's where we're at. So we keep $2,000 to $5,000 from tax savings, personal credits cleaned up, secured $50,000 to $80,000 in business credit at 0%, and the foundation is set. And now we can actually start to build off of this. Now, in quarter two, we're going to build the foundation and start generating income. Okay, so the goal is here to set up a solo 401k plus launch a short-term rental. Okay, so quarter one was all about stopping the bleeding. You plug the tax leaks, clean up the credit, and you got $50,000 to $80,000 in 0% funding sitting there. So by Q2, this is where you're going to start actually building. First is to open up a solo 401k. You can go with Fidelity, Schwab. Application takes an hour online, and this can shelter up to $71,000 per year under 2026 limits. You compare that to $24,000 employee contribution limit in a standard 401k, and the exact amount depends on your business profile or your business profits. So that's $46,000 more you can put away tax deferred every year, and you set up automatic transfers and you're done. The second thing is to start researching short-term rental markets. This is month 4. Okay, you're not launching yet, you're starting to research. So you can use AirDNA to pull market data, look at neighborhoods in your city or nearby cities, and then you can start calculating average nightly rates, occupancy rates, monthly expenses, and then net cash flow after everything. Now, don't just guess. Okay, run the actual numbers. You're about to deploy, let's say, between 10 to 15 grand. Spend a couple weekends doing the research properly. Okay, look at 10 to 20 properties, narrow it down to a couple, run the numbers, and then pick the best one. The third thing is to sign the lease and furnish the property. Okay, so by month 5, you've done the research, you know which property cash flows, you sign the lease, and now you furnish it. And this is where those 0% business credit cards from quarter one is going to come in handy. Okay, so let's say we're going to deploy 8 to 15 grand into furniture, decor, setup, and the first month's rent and deposit. This is exactly what that credit is for. You're not having to pay interest. You're using that money for free to buy income generating assets. Then you want to list it on sites like Airbnb, VRBO, Booking.com, etc. Take great photos. Don't use your iPhone with bad lighting. Either hire someone or learn how to stage and shoot properly. You want to write a solid listing description that really sells the location. Price it competitively depending on what AirDNA research tells you. Don't overprice it and sit empty. And also don't underprice it and leave money on the table. So you can list it. The bookings are going to start coming in. And this is month 5. You're now starting to generate some income. And the fifth thing is the mid-year CPA check-in. So halfway through the year, you want to meet with your CPA. You want to review your tax savings from quarter one, look at your HSA, home office deduction, S-Corp savings, and make sure everything's tracking correctly. And you can also adjust quarterly payments if you need. And if you're making more than projected, increase the payments. If you're under, then adjust down. You don't want to get hit with underpayment penalties or a massive bill at year end. So by the end of Q2, 6 months in, here's where we're at. $10,000 to $30,000 saved in taxes year to date. Solo 401k funded and growing. We have our short-term rental that's generating $1,500 to $2,500 per month. And we have first income stream is live. Okay, so you're no longer just keeping more money. You're starting to make money as well. Now by Q3, we're now going to start to scale and compound. So this is the quarter for where we have our short-term rentals are going to be profitable, and we're going to start adding in advanced strategies. So by Q2, you launch your property, it's up and running. By Q3 is where you're going to start systematizing it and layering in the advanced moves. So first is you want to automate your property. So by month 7, you've been running this thing for a couple months, and now you know what works and what doesn't. So now you start to systematize it. You set up automated messaging through Airbnb or tools like Hospitable, Guesty. Then the guests check in, all that, and all those instructions are all automated. You're going to hire a reliable cleaner. You're going to pay them per turnover. And your goal here is to reduce your personal involvement to a couple hours per week. All you have to do is just monitor bookings and handle the occasional issue. The property should be up and running without you micromanaging every single guest. The second thing is to make sure your CPA is taking the QBI deduction. This is the 20% deduction off your business income. It's automatic if your CPA knows what they're doing, but a lot of them don't optimize for it or they miss it entirely. So pull up your last tax return or your projection and look for qualified business income deduction on the form. If it's not there, then bring it up. This is easily worth 3 to 10 grand depending on your income. The third thing is to add your spouse to your payroll if you haven't yet. If your spouse does actual work for your business, like bookkeeping, marketing, property management, and you haven't added them to payroll yet, then do it now. Okay, you can pay them up to $16,100 tax-free in 2026 if it's structured properly. The exact amount depends on your entity type, your household situation, so work with your CPA on the specifics. But that's going to lower your taxable income and save you $3,000 to $5,000 per year. Next is to start your Roth conversion strategy. Okay, this is where you start building your tax-free wealth bucket. So you can convert $10,000 to $30,000 from your traditional IRA into a Roth. You can pay tax now at 22% instead of paying 33% later when you're retired and in a higher bracket. You can work with your CPA on the exact amount and timing, but you also don't want to accidentally bump yourself into a higher bracket by converting too much at once. And you can spread this out over a few years if needed. Fifth thing is to set up tax loss harvesting. So you can go through your investment portfolio, look for any positions that are down, you can sell them, harvest the loss, and then use that loss to offset the gains you took earlier in the year. This is going to save you 20% in capital gains tax on whatever you offset. And you can do this manually every December, or you can automate it through a platform like Betterment or Wealthfront. Okay, they're going to monitor your portfolio daily and then harvest those losses automatically. The sixth thing is to pay back your 0% credit lines. So if you borrowed 8 to 15 grand at 0% to furnish your property back in Q2, and once your property starts generating cash flow, you're going to use that cash flow to pay back the credit lines. So you're not carrying this debt forever. You're using the income that asset generates to pay it off over the next 12 to 18 months. So by the end of Q3, 9 months in, here's where we're at. Short-term rental is profitable and systematized. It's taking a couple hours per week to manage for your time. You're saved an additional $5,000 to $10,000 the QBI deductions, Roth conversions, and tax loss harvesting, and you're building a tax-free wealth bucket in your Roth accounts. Okay, so you're not just making more money, you're keeping it and growing it tax-free. All right, finally, Q4. Okay, this is where we're going to protect and maximize everything. The goal for this quarter is to protect assets and set aside time for year-end optimizations. So we're 9 months in, short-term rentals running, tax strategies are working, the money is starting to flow. By Q4 is about locking it all in and maximizing year-end moves. First thing is to review your insurance. By month 10, you build assets worth protecting. So you can schedule a consultation with an insurance professional and review what you need. So you can look into an umbrella policy, anywhere between $1 to $5 million in liability coverage, typically costs $200 to $400 per year. Business liability insurance for your Airbnb property insurance. If the landlord's policy doesn't cover short-term rentals, you want to look into that as well. This is boring stuff, but it's necessary because one lawsuit without proper coverage can wipe out everything you just built. So this is really important. Second, check if you need LLC for asset protection. But by month 10, your assets are over $100,000 or you're in a high risk situation, then it can really come back to bite you. Okay, so just make sure that you set up an LLC and you can meet with an attorney if needed. That one consultation is going to make sure to tell you what makes sense for your situation. Now, the third thing, max out your solo 401k contributions. So December 31st is a deadline for employee contributions to your solo 401k. If you haven't maxed it out yet, then you can do that now. Okay. Now, you can also make employer contributions up until your tax filing deadline, but employee contributions must get in by December 31st. This is one of the biggest tax savings moves that you can make, so don't leave the money on the table for this. The fourth thing are equipment purchases if applicable. If you need equipment for your business, then buy it before December 31st. Section 179 lets you deduct the full cost in the year that you purchase it. This works for computers, office equipment, vehicles over 6,000 pounds if you use them for business. And don't just buy stuff you don't need just for the deduction. Okay. But if you're going to buy it in January anyway, buy it in December and take the write off this year. Fifth thing is the final tax loss harvesting sweep. So go through your investment portfolio one last time, look for any positions that are down, harvest those losses to offset the gains you took earlier in the year. December is the last chance to do this for the tax year. And don't wait until December 30th. Trades need some time to settle. So do this at least a few days before. And the sixth thing is to prepay any January expenses. So if you're on a cash method accounting, most small businesses are, you can prepay January expenses in December and deduct them this year. Things like rent for your Airbnb, insurance premiums, or any subscriptions or software. And then finally is your final CPA meeting. Okay, schedule your year-end meeting with your CPA and review everything. So your total tax savings for the year, any missed opportunities, plan for the next year, and discuss if you need to adjust your structure. Okay, maybe that's moving from an LLC to an S Corp or vice versa. This meeting is going to set you up for year 2. And so by the end of Q4, 12 months in, here's where we're at. Total taxes saved, 20 to 60 grand. Monthly income, $1,500 to $2,500 from our short-term rental. And our net worth increase is $50 to $150,000 plus. Our assets are protected, systems are running, and you're not just making more money, you're keeping it, you're growing it tax-free, and you're protecting it. And that's 12 months. Okay, now let's talk about what this actually costs you in time. Okay, because I know a lot of you guys are thinking, okay, this sounds like a lot and this is going to take up all my time. Here's a breakdown. Total time over 12 months is 120 hours. Roughly. Okay. So that's 2.3 hours per week on average. It's not 20 hours. It's not full time, literally 2.3 hours per week. So when can you do this? So you can do it Saturday morning, 6 to 8 a.m. when the house is quiet, a couple hours, or you can do it during your lunch breaks, 30-minute tasks. You can pull your credit report, open an HSA, schedule that call, or you can do it in the evenings, okay? 8 to 9 p.m. That's it. Okay. You're not quitting your job. You're just reallocating a couple hours per week. So let's do the math. So conservative result after 12 months, let's say we can save $30,000 in taxes. We have $1,500 in income from our property. That's $18,000 per year for that. So the total benefit, $48,000. You divide that by 120 hours of work. That's $400 per hour. Show me any other activity that pays you $400 per hour, and I'll tell you to go and do that instead. Now, here's the reality though. Some months you're going to do 5 hours. And some months you're going to do 0. And that's totally normal, right? Because month 1 is setup heavy. Meeting with your CPA, filing paperwork, opening accounts. That may be a few hours per week, a few hours for the month. Now, month 5, when you're furnishing your property, maybe that's 6 hours over a weekend. But month 7, maybe that's just 1 hour checking in because everything's running. Progress isn't linear, okay? Some weeks your head's down. Some weeks you don't touch it. The people who succeed are the ones who don't work perfectly, but they just keep at it every single week. Those are the ones who keep coming back to it. All right. So earlier I asked you guys how many hours per week you can honestly commit to this. Most of you guys said 2 to 3 hours per week. Some said 1 or 2 hours, and a few said 4 plus. Here's what each pace actually looks like over the next 12 months. So let's break it all down. Let's start with a careful path. Okay. Let's say you're going slow, and that's totally fine. So year 1, you focus only on tax strategies. So S Corp, HSA, home office, solo 401k, and that's it. You skip the short-term rental. You're just plugging the tax leaks and building the foundation. By year 2, you see that this is proven to work. You start adding the income assets. In 12 months, your result is $20,000 to $30,000 in saved in taxes, $0 to $500 per month in income, if any. So your net worth increase, if you go at the slow, is going to be $40,000 to $60,000. Okay, so this is the cautious path. You're just testing the waters before you dive in. Now let's talk about the steady path. You follow it quarter by quarter, one thing at a time, and there's no rushing it. And you finish quarter 1 in 3 months. You launch your Airbnb in quarter 2, and you start layering in advanced strategies in Q3. You protect and maximize in Q4. So your 12-month result here, $30,000 to $40,000 saved in taxes, $1,500 to $2,500 in income from your property. So your net worth increase is $80,000 to $100,000 if you take this path. Okay, this is the sustainable path if it's going to fit into your life without burning you out. Okay, now let's say you're all in. Okay, you're moving fast. You finish Q1 in 6 weeks instead of 12. You knock out your CPA consult, entity formation, your credit cleanup, credit card applications in half the time. So by month 6, you launch your property and you're researching a second income stream. Okay, maybe it's a second property or a completely different asset class. So 12 months in, you have $60,000 saved in taxes. You have $3,000 to $5,000 a month in income coming in, whether that's 2 properties or diversified income. Your net worth increase here is $120,000 to $180,000. Okay. This is the aggressive path. It works if you've got the time and you're willing to sprint. Now, here's the point: pick your pace and commit to it. Don't compare your careful pace to someone else's full gas results. That's not fair to you, and it's just going to make you feel like you're failing, right? You're not competing with anyone else in this chat, okay, or anyone else here. You're competing with a version of yourself who does nothing for 12 months. Slow progress beats no progress every single day of the week. And you can always speed up in year 2 as well, right? Maybe you start in the careful range. You only focus on the tax strategies, save 25 grand in year 1. By year 2, you're starting to become confident. Okay, you move to steady. So you launch a short-term rental, you add a $2,000 per month income stream. The pace that you pick today isn't permanent. It's just where you're starting from. All right, so we just walked through the 12-month roadmap, the tax strategies, credit stacking, Airbnb launch, asset protection. It sounds good on paper, but does it actually work? Okay, so let me show you someone who's implementing this right now inside our Legacy Wealth Blueprint program. Okay, so this is Pat. They're seeing $82,000 in meaningful revenue. We talked about Abigail. Okay, she is saving $100,000 in ROI in the first 12 months. Caitlin is seeing $121,000 in ROI in their first 12 months. Okay, so what I want you to do is I want you to commit to one thing that you're going to do this week. Not 10 things, not transform my entire financial life, but literally one thing. Okay, it has to be specific. It has to be small. It has to be something that you can actually finish. So here's some good examples. So you can say, pull my credit report on annualcreditreport.com, or schedule a CPA consultation call, measure my home office and square footage, or open an HSA through my employer portal, or you can even say, research 3 short-term rentals on AirDNA. Some bad examples are get rich or transform my life. See, the difference, one is concrete. You can do it in an hour. You know when it's done. But the other is super vague. You're never going to start because you don't know even where to start, right? So let me know in the chat, what's one thing you're going to do this week? Okay, and also be very specific. Make it small, make it achievable. Let me know in the chat what you're going to do this week. Let me know. Pull credit reports, home office, find a CPA, consultation, start a checking account, schedule a CPA, stop the leaks. Okay, awesome. So every single one of you who just typed something in the chat committed to taking action this week. Not someday, this week. And that one action leads to the next one, right? So you can pull your credit report, score 680, you pay down one card, and a couple weeks later, you're at 710. And now you can apply for business credit. Or you measure your home office, it's 12% of your home, you save yourself $4,000 this year. And now you're looking for the next thing. Or you schedule a CPA call, okay? They walk you through the S Corp, you file a form, 2553, you save yourself $5,000, okay? And now you want to see what else you can do. But it starts with doing this one thing this week, okay? Not next month, this week. So let me tell you what's going to happen after this challenge ends, okay? 50% of people won't do anything. They're going to close this tab, go back to work, tell themselves that was interesting, and never think about it again. 6 months from now, they're going to be in the same exact financial position, same tax bill, same stress. 25% will do one thing and then stop. They're going to pull their credit report, schedule a CPA call, and they're going to feel good about it for a week, and then life gets busy again, and then one thing just sits there. A year from now, maybe they save $1,200 from the HSA. Better than nothing, right? But nowhere near close to what was possible. 25% will follow this imperfectly for 12 months. They won't do everything perfectly. They're going to miss a quarterly tax payment, maybe forget to track mileage, but they're going to keep going. Q1, they're going to set up the tax strategies, say 5 to 10 grand immediately. Q2, they're going to launch an income asset. Maybe it only generates $1,200 per month instead of $2,500 per month, but that's fine. Q3, they're going to layer in the advanced stuff, the cost segregation study, solo 401k, and the asset protection. And by Q4, they're going to look back and realize they're in a completely different position. 20 to 60 grand saved in taxes, $15 to $30,000 in new income, $50 to $150,000 plus increase in their net worth. And not because they did everything perfectly, but because they kept moving forward. And I can't make that decision for you, right? You spent the last few days here in this challenge. You've seen the roadmap, you've seen the examples, and you've seen people doing this right now. You know what's possible. Now, the question is, are you going to do something about it? Or are you going to be in the 50% who does nothing, or that 25% who did that one thing and stops? Or are you going to be in that 25% who implements imperfectly for 12 months and ends up in a completely different financial position? Okay. 12 months from now, you're going to be one of those, be in one of those three groups, right? You get to decide which one. Now you have two paths from here. The first path is you do it yourself. So you take these notes, start researching, Google how to file S Corp election, watch YouTube videos on solo 401ks, and try to piece it together. Okay. You spend 6 months figuring out the S Corp filing, another 6 months on the solo 401k, make mistakes, file something wrong, miss a deadline, and forget to track hours for the short-term rental loophole. And those mistakes really cost money. Okay. The total full implementation can be 2 to 3 years or more. And it's going to cost you $20,000 to $40,000 in missed tax savings, wrong moves, and opportunity cost. And you can do this on your own. The information is real and it works, but it takes longer, costs more, and you're going to learn by making expensive mistakes. All right, the three paths again. So let me recap for those who missed it. Okay. So path A is the full legacy wealth blueprint. Everything you need to cut taxes, kill debt, and protect what you're building. You execute it yourself, but with the full curriculum, the coaching, and community behind you. Path B is going to add the Airbnb Ascension. Okay. So you get a dedicated short-term rental coach, done for you listing setup. You get the AirDNA and all the tools to find and launch your first property. And the path C is fully done for you. Okay. So we source the deals, we structure everything, launch all the operations, and then we're going to hand you a property that's already earning. Okay. Now there's only 20 spots for this one, just because of the demand that it takes from my team. But the same foundation is across all three. The difference is how much we handle for you. Okay. So you can go to managemoney101.com to apply and book your call. Okay. Book call is free. And if you have any issues, email us, preston@legacyinvestingshow.com, or you can click the link in the chat, or you can just go to managemoney101.com. Okay. So let me go back to these slides. So every month you wait is going to cost you money. If you're making $120,000 and you're not structured correctly, you're literally overpaying taxes by about $2,500 per month. If you're not using those credit strategies, you're missing $50,000 to $100,000 in funding opportunities that disappear once you know about them. And if you're not investing in the right vehicles, you're losing compound interest windows that can't be recovered. 6 months of delays is going to cost you $15,000 in lost tax savings, plus $50,000 in missed funding, plus opportunity costs on investments. If you delay 12 months, $30,000 plus $100,000, plus the compound interest on all of it. The longer you wait, the more expensive waiting becomes. Now, your kids, if you have kids, won't remember the couple hours a week you spend on this, but they will remember growing up without financial stress. They're going to remember you had time for their games because you weren't overworking overtime. They're going to remember feeling secure. Okay. And this isn't about the money. Okay. It's about what the money buys, which is time with your family, freedom to say no to jobs you hate, ability to help your parents when they need it, sending your kids to college without debt, retiring when you decide and not when your employer decides. Okay. That's what we're actually talking about here. And 3 days ago, you showed up, you learned, mission accomplished, right? But now you have to decide if you're going to be in the 5% who actually do something with what they learn. Okay. I can't make that decision for you. Neither can anyone else in this room. But I can tell you this: the people who act in the next 48 hours will be in a completely different position 12 months from now than the people who just think about it. Speed beats perfection every single time. And imperfect action beats perfect planning. All right. Okay. So we have one final session to go. Okay. And a lot of you guys have already booked calls. We've got a ton of questions about what actually happens on these calls. Like, what do we ask? What do we look for? What do we look at? And how do we figure out which path is right for me? So what we're going to do is we're going to pull back the curtain. I'm going to walk you through exactly what a consultation looks like step by step. And you're going to see how we analyze someone's situation, how we build a plan, and honestly, how we decide if someone's a fit or not. Okay. And if you've even been considering booking a call or have already booked a call, then you need to see this. Okay. So we're going to take a quick break. We're going to wrap up with the last session. So we're going to take a quick 5-minute break, and we'll be back here to wrap up the last session. Okay. And we're also going to do a Q&A call to answer any questions that you have in this last session. So make sure that you are here for that. Okay. Okay. Talk to you guys here in just a second.